Okay. All right. So Jennifer's up. She's going to teach us how to invest long distance.
Yes.
Okay.
Exciting. Yeah, I'm glad it just kind of flows right in with the whole REI USA supergroup state meetings. So that's a great resource now that I didn't have available to me before I started investing long distance.
Okay, good. Awesome. Well, you take it away. I'm going to mute myself, and any questions or anything like that, you just put it into the chat and we'll answer it at the end. Okay.
Got it. And I'm going to screen share now if I'm allowed to.
Yes, go ahead. Can you?
Let's see. Okay, got it.
Got it. Okay.
All right.
All right.
Oh,
good.
Hopefully everybody can
Yep, perfect.
see my lovely PowerPoint. Close that window out. Okay, so thank you for having me on again. My name is Jennifer Ward, and I have been investing long distance. Well, technically, I started doing it back in 2007, and then I had a long hiatus and have actively been investing long distance in the last 3 years. I live in Denver and I invest in Indianapolis. And I started doing that 3 years ago because about 4 years ago, when I started getting back into real estate again, I learned about bigger pockets and just started networking like crazy and listening to all of the podcasts and reading through the forums. And so that's when I was living in Denver, the market was just going up and up and up. It's been a really hot market for, I think it's going on 6 years now at least. And when we moved to Denver, it was just starting to really increase exponentially, and it just hasn't stopped. And then, of course, like all markets around the country right now, appreciation is just going crazy, which is great if you're already in the game. So if you already have properties, but as they say, with it being the seller's market right now, I mean, I don't look too much into like what's to come, but I don't think there's necessarily ever a bad time to get into real estate, and that's why long distance comes into play because if you're open to it, you'll find a market that can work for you. So it's not necessarily the timing of real estate, in my opinion, but just finding a market that works for you. So let me move on. So far as like investing long distance and investing in real estate, really, you have to, answer your why. Why do you want to get into real estate investing? And for us, my family, it was about freedom, having financial independence. And real estate is a great vehicle to get you to that goal of financial independence. I'm sure everybody on here who's listening can agree with that. And then the next question is, once you've decided that, on why are you doing this, it's like if it is to have more freedom in your life, to be able to use the hours in your day as you want to, then I had to think about, well, what kind of real estate strategy can help me have that time freedom as well. So not just financial independence, financial freedom, but also just freedom in my time. And we wanted to invest long distance because I'm a person that if it's something that I can do, I'm going to do it. But when I started thinking about, my time more, I knew that if I was to invest locally, if our renter called with an issue, I would be the one taking my time out of the day to go fix it. And so in order to take me out of the equation, it had to be long distance. So that was one primary reason, but also cash flow. As I mentioned, I live in Denver and it's been a hot market for a while. If you like to go by that basic rule of wanting, if you're looking at rental properties, for example, and you want to meet that 1% to 2% cash flow rule, that's not happening in Denver. And so I needed to find a market where it could. And because we want to be able to live off our rental income, cash flow for us was really important, not so much appreciation. We're definitely, making good progress and appreciation in Denver, but that doesn't put cash in our pockets every month, only if we were to sell. So that was the other reason to go long distance for us, because we are focused on cash flow. All right. Oops, I skipped one. So, okay. So I kind of went over freedom and talking about that. So then it's about, where do I put the pin, right? There's all these markets. You hear all about it. So when I started looking into it, what I did initially when, before it was Bigger Pockets as like the big resource. Now we have REI USA and of course other media sources to look at. But when I was really doing my research, I was just, listening to lots of podcasts, going on forums and reading through and seeing, for me, I was picking out places that were repeated multiple times as like cash flowing markets. Okay. And so, but it was just becoming so overwhelming, just, so much anecdotal information. It was hard to decide. So I had to systemize it. I had to figure out a way that I could systematically look at all these different markets and see which one for me would be a better fit. And so that's when I get into the meat of this presentation, talking about the different variables that you might want to consider when looking at long distance markets or other markets in general. So because we were focused on finding rental properties and doing the buy and hold strategy, of course, rent to value was very important. So again, if you're just to look at that basic 1% to 2% rule, the probably just like the easiest metric to use to see if that market is viable. I wanted to make sure where I was going on average, the rent for a home in like a B minus type of neighborhood, a standard size, maybe 3-1. A lot of them, where I am tend to be 2-bedroom. But if I could find a 3-1 or a 3-2, even better, would I be able to get at least 1% in rent? And so where I invest, at the time when I was buying, the average home was about $70,000 for a 3-1. And I was able to rent for around $800 to $850 before, like if it was just a, standard finishes and I didn't go in and do any rehab to it and update it. So, and so that, was important to me. And then, of course, insurance to value, taxes to value, thinking of those necessary expenses that you need to pay that you can't get away from. So I learned when I was doing some research, some markets had really high taxes. It was, from the face value, it looked like it would have been a great market to invest in, buying houses for less than 70,000, getting more than 800 for rent. Ideally you're like, oh, well, that should be the winner, right? Well, they had really high taxes. So at the end of the day, I was making less cash flow because of the high taxes I had to pay. And then insurance, obviously we know about certain areas that have much higher insurance premiums than others. So thinking of, probably any coastal cities, you're going to have higher insurance just because of, the hurricanes, maybe living in an area where there's lots of tornadoes, the tornado alley. So that's something you got to factor into. Also, when it came to rent, I wanted to make sure it was affordable for people to live there. Denver, for going back, because, that's where I live, the rents were increasing, but I just don't know how sustainable that is. The salaries aren't increasing as fast as the rent is increasing. And so I wanted, usually when you're qualifying tenants, or if you have a property manager qualifying tenants, they want to make sure that they make 3 times what the rent is. And so I wanted to make sure that whatever the average rent is, people in that area on average can make about 3 times that. And that was pretty standard. And that way, I wouldn't have to worry. Ideally, the theory is that I wouldn't have to worry as much about people not being able to pay their rent is the goal, right? Oops, sorry. I was trying to move my window here. It's covering my other variables. And then, you want to also make sure it's a market where people are wanting to live. So is the population growing or is it declining? Now, I will say, like, you really have to dig in to really get accurate information for that. So, one market I analyzed was Cleveland. That was, a great cash flowing market, if you will, for rent to home value, but it was one with the high taxes. But again, it's all about the specific areas. But I saw that Cleveland, when I was just using my general data, like sources, it said it had a declining population. But I did get some anecdotal information that what was happening at the time was Cleveland, the city proper, the inner city, people were starting to move out of and going more into the suburban areas. So Cleveland as a whole, the whole metropolitan area, could still, if you looked at the whole area and the surrounding areas, it did have a growing population, but it was like the inner city. So wherever the data was pulling from showed it declining. Then you can look at appreciation. Now, again, I mentioned my focus right now is cash flow. So I wasn't so concerned about a market appreciating, but I didn't want it depreciating either. So if it was just sort of a flat line, I personally was okay with that. But I wanted to make sure it wasn't depreciating. But some people are in this for the appreciation. In my opinion, it's a little bit of a gamble, but some people can really, do good research, read the market right, and make some money off of appreciation. I like to see it as icing on the cake, though. Then, of course, you want to think about unemployment. That kind of goes into the population growth. So most likely, if there's plenty of jobs, people are going to stay. And, again, like if unemployment is growing in an area, that's concerning. You want to know, like, what's happening with the industries. Are they moving out? Why is unemployment growing? And obviously that's going to affect your cash flow, because if people lose their jobs, they're not going to be able to pay their rent. And then crime, of course, is another variable you might want to consider. That's kind of more, I would say, again, I take crime with a grain of salt, but I don't want to necessarily go into a city that has substantially higher crime than other cities. But, every city is going to have a certain level of crime. So then once you do pick your cities, crime is like one of my lesser variables. Like it doesn't weigh as heavy as some of the other ones. But once I had picked the city, then I go start looking more deeper into the area and see which have pockets of higher crime than others. So. Other things you would want to consider when looking at other markets to invest in is property management fees. So, generally when you first start out into a new market, and especially if you're a newer investor, you will want to hire a property manager. And on average, they could take 10%. So that's going to take away from your cash flow. But there are markets actually out there where the average is 8%, or sometimes the average is 12%, depending. So you want to look into that as well to figure out what the average property management rate is in that area. Talking about industries, that kind of follows through with when I was talking about population growth and unemployment. Is it a diversified area? Are there many different industries? Is there, a medical presence, maybe a base, maybe university, tech? commercial, things of that nature. So I'm a believer in finding a market that has a diversity of of industries. So that way, in case, there was a factory or something that had to shut down or decided to move because they could get better tax benefits elsewhere, that the whole city wasn't dependent on that income. So to me, that's really important. Also, you could look at, this is anecdotal information that you might have to do more research to find, but you could look into factors for rental property expectations. One example of that is, are appliances expected in your rental properties or not? So where I am, most places, I think probably it's expected to provide a stove, a refrigerator, maybe not a dishwasher per se, but definitely a stove and a refrigerator. I have learned through my community that Oklahoma, that's not a requirement. You don't have to provide a stove or a refrigerator. And to me, that's a big cost savings because those will inevitably need to be replaced. And, they cost about $500 per appliance, depending if you buy new or used. But that could eat away from your cash flow for a few months, depending on how much your cash flow is a month. So that's another factor you might want to look into. Also, tenant landlord law. So as the landlord, you would ideally want to go into a place that is more landlord friendly. And usually the question you want to ask to figure that out is, what's the eviction process? So if a tenant wasn't able to pay, do I have to first give them a full 30 days notice after they're delinquent to be able to pay? Then I can file for eviction, or is it just a few days notice and I can then start the eviction process? So the next is multiple service providers. So that goes into, are there many different property management companies you can hire from, that you can interview and choose from? Are there like a lot, I guess contractors today are really hard to come by, but hopefully there's a decent contractor maintenance pool that you can pull from. So any, I would say large town, small city will provide a number of them, a number of different options for each service provider that you would need. And I say this because, it's taken me multiple property managers to find the right one. So if I was in a small town and I only had like one or two to choose from, then, I'm really reliant on just those two. And I have to kind of take the level of service that they provide. So I like it to at least, know that I have at least 5 different property managers I can interview. And if you ever get to the point where you feel comfortable self-managing a property long distance, you could start utilizing like those apps such as Thumbtack, where you could put a request in and you can get a response and maybe the issue resolved the same day. That's what I was able to do for a property that we needed the garbage disposal replaced. So I just put it out there on Thumbtack, like, I have this job, garbage disposal needs to be replaced. And I got a response instantly for a good rate. And I ordered the part from Home Depot. They picked it up, went and installed it, and it was done in just a few hours. So, I don't know how possible that would be in a smaller area. Okay. I think there's some questions coming in. Maybe I can look at them, and I'm happy to answer some questions along the way.
Okay, we have 2 questions.
Okay, you
Are
do.
schools in your list of criteria?
Yeah, it is once I've identified the market I want to go to. So that would be, I guess you could say, a micro variable I would consider. I was trying to kind of go over like the variables on picking like the city. But once you pick the city, then I would look into the schools. And I generally, like Indianapolis, for example, the school district for Indianapolis on average is just rated 1. So it's pretty low overall. I mean, it is very low. And so for that, since I knew 1 was the average, the baseline for the Indianapolis school district, I was looking for properties that had schools that were around 3 or 4, and that were still within my price range. Yes.
Okay, one more question. Are you able to share your sources for the data?
And that's where I'm at now.
Okay.
So good
All right.
question. Yeah, so these were some of the data sites I used. I haven't really gone through and really screened a lot of these sites to make sure that they were providing fairly accurate information, but I do know, a lot of other people use them. So with anything, you have to take things with a grain of salt. And I think honestly, this will help give you like a bird's eye view about the different markets when comparing them. But once you've kind of narrowed it down to 1 or 2, then the best data sources will be the boots on the ground. So then reaching out and making contacts, which I'll go into here in just a minute, of all the different contacts you want to touch base with. So Value Penguin was a site I found that gave you average insurance premium prices for different cities. So again, it's probably very generalized information. But if you have an insurance broker, I've recently found an insurance broker, and they do policies nationwide. And Goosehead Insurance, I'll just bring them up. So Goosehead Insurance, and I'm happy to connect you with my particular contact. But I could go to them now and say, hey, tell me, what's the insurance premiums that you generally see for this city? So that would probably be more accurate. But just for like a quick analysis, Value Penguin works. Well, worldpopulationreview.com, pretty obvious there. So it kind of gives you the populations of different cities. Ones that gave me a lot of information were citydata.com and neighborhoodscout.com. So they both offer, I would say Neighborhood Scout gets into more detail, because you can actually, they have membership services, so you can buy in and have more data open to you. City data as well, but that's where I got, the average home value, average rent. They give you some crime indexes. So a lot of the information, a lot of the variables I talked about, I was able to pull from those sites. And then Bigger Pockets at the time. So, I would still use them today, of course, but just that, again, that's kind of how I initially picked the cities I was going to analyze. So it was just by going on different forums. So today, you utilize going on the webinars and meetings with REI USA, see what places people are talking about, add those to your list. Go on Facebook, go on all the real estate groups on Facebook, put that, see which cities are coming up. And then of course, Bigger Pockets is what I used when I initially did this. All right. Let's go on to the next. Sorry. Okay. So once I had pulled together all the different cities that were mentioned, repeatedly, I put them in, I made a chart basically. And so I put the city, and then I made different columns for rent to value, rent to income, taxes to value, insurance to value, average appreciation, crime. Oops, sorry. It's just my little, I need to just change the viewing angle of this because it keeps covering. And then population growth. So I just kind of made ratios for all of it. And I made little notes saying, higher is better for this one, lower is better. So this is when I did my initial analysis and when I chose to put the pin in Indianapolis. So these numbers are old. at least 3 years old. I'm sure if you looked at the appreciation today, none of these would be declining appreciation. Like at the time, Cleveland, again, the inner city of Cleveland was depreciating, but I'm sure that's no longer the case now. So, and I'm sure these are much higher rates of appreciation. I chose Indianapolis because of this. So you'll notice in my chart that Indianapolis was never the worst nor never the best. Okay. But it generally ranked about the top 2 of each one. And so for me, Indianapolis kind of created a flat line. And I liked that for my strategy. I wanted predictability. I wanted consistency. That was my goal when investing in real estate with rental properties. I didn't want to have to worry too much about what was going to happen. There's some of these markets do a lot of up and down. So, it's great in the highs, but you got to prepare for those lows. I didn't want to have to worry about that. So Indianapolis pretty much made a flat line, but if it was at the top, of the flat line. And that's what I liked. And so a lot of these, they might have been great. For example, let's see. Memphis was awesome as far as rent to value, but it was not so great with rent to income. So it wasn't as affordable as other places. So, you have to kind of decide which variables are the most important to you. So putting like a weighted scale, right, on each variable, deciding which factors are most important to you, and then see which city falls in line with that, with your weighted scale. Let's see, do we have any other questions? How did Bigger Pockets help me find a city or location? It was really just about, I was, so engaged at that time, listening to all the different podcasts I could and reading all the different forums. And I just kind of, would see which cities kept popping up. I did a search, or I put like a keyword search, long distance or remote investing. And like at the time, Memphis was popping up a lot, Indianapolis too. So that's just kind of how it helped me, just kind of getting an idea of like, and they would do some lists of the top places for rental investing, top cash flowing cities, so it was a lot of just anecdotal information. And once I saw kind of a pattern of a city being repeated more than a few times, then that's why I added it into my list. With my particular chart here, Albuquerque wasn't mentioned very often at all, but I live in Denver, and Albuquerque was a place that wasn't too far away. And I heard from other investors that it was a decent market compared to Denver. So that's why I had put Albuquerque on here, but I probably, if I wasn't thinking about location specific, I probably wouldn't have included them. And then Kansas City also was another reason, just by proximity to Denver. But now I would not care how far a place is. So, all right, let me get on to the next. So then I'm going to talk about how you go about establishing yourself in a long distance market. So I chose Indianapolis. So the next thing I did is I decided I was going to make a trip there, and I highly recommend this. Hopefully it'll become a lot easier very soon to travel again and not have to be so concerned about your health and other people's health. But, once you feel safe to travel, definitely make a trip to the city or the market that you identify as being a good fit for you. I say make a trip there because what's going to make or break you is your team in that market. And in order to establish a team, I feel so strongly that you have to make that physical introduction, because if they know that you took your time, your money to come and visit that market, then you're serious. Because let's face it, today with the market being as hot as it is, anybody involved in real estate is super busy. Realtors, insanely busy. Property managers, very busy. contractors, I mean, good luck, to be honest. So you have to make that physical introduction for them to take you seriously and not just push you on the side and forget about you. And so when I made that decision to make a trip, I wanted to really maximize my time when I was there because we're all very busy, I'm sure. And I was working a W-2 job at the time. And so I wanted to attend as many networking events as I could, in addition to having my one-on-one meetings. So I first went online and looked up to see what groups were in Indianapolis that had a regular meeting. And so I went on meetup.com and Facebook, Google, and probably BiggerPockets too. Now, you can utilize REI USA, and I'm sure a lot of the virtual state meetings that are happening, I imagine they'll also have a group that or were stemmed from a group that meets in person anyways. So you could utilize that too. But yeah, so I went on and I identified which real estate investing associations were in that area. And I went on and looked at their calendar. And then I just kind of figured out when more meetings were happening in a particular week over a few days. And so that kind of helped me choose the dates that I was going to go. And then around that, I reached out utilizing at the time BiggerPockets. Now I utilize Facebook groups a whole lot more. But I went on there to see, who the realtors were in that area, who people were mentioning as like good realtors, good property managers. And I tried to find a way to meet with contractors because at the time my intent was to do the BRRRR method, buy a property, rehab it, rent it out, refinance and repeat. So I was wanting to identify some contractors if I could. I reached out to a variety of them and I made appointments, probably met with 3 different property managers, 3 different realtors at least. It's harder to meet with contractors. Usually they don't care to meet with you unless you actually have a project, that they could start on. But there was a service in Indianapolis, and you'll probably find a similar service in a lot of markets where they focus on investors and they'll go out and give you a bid on a property before you buy it. You have to pay for it. Could be $100 to $200, but they'll visit the property and put together a scope of work and give you a rehab budget before you put an offer in. Of course, since it's the hot market it is, hopefully they can do it the same day you find it, because you don't want to wait long to put an offer in. So those were all the different people and other investors, of course. So I wanted to meet with other investors that were local to that market and just kind of pick their brain, hear about their experiences, neighborhoods that they would recommend. Of course, you can get that from realtors too and property managers, but it's always great to meet with other investors. And they'll tell you which property managers they might have worked with, which realtors as well that worked out for them. And then I decided to stay with locals. So I chose an Airbnb where the host lived on site. And I did that so that way I could, in my downtime, if they were home, be able to talk to them about the city. Simple as that. So I found that really helpful. Got a lot of great information when I went to Indy. They're like, oh yeah, this, neighborhood, we've seen so much growth in the last 2 years. This one has been fairly stagnant. They can give you a lot of information too. And then, have fun when you're visiting the city because, I do visit Indianapolis. I try to go once a year. So you want to see if it's a city you can enjoy yourself. So take a tour. Airbnb has now these experiences. So get to know the locals and enjoy yourself. So it doesn't have to be all business. All right. So, building your team. So I kind of just went over that, but, property managers initially at the beginning, I feel like are your number one team member. They can open contacts to you, like with other realtors. A lot of them will have a realtor as part of their team. but they're working with realtors all the time who are investor friendly, because generally there's, a symbiotic relationship between property managers and realtors. So once somebody buys a property, an investment property, they generally want to hire someone to manage it. So, each one of them, realtors and property managers, will have contacts for each other. And, a property manager will generally have the contacts you need for contractors. Now, most property managers, now that it's been a while and a little while now, and I've learned and gone through several different property managers, but generally they at this time don't share their contractors as much, because if they start sharing their contractors, then it takes away from their contractors' ability to service the properties that they manage. So, but it just depends, on how the property manager operates. If they don't necessarily do maintenance or coordinate it, but just allow property owners to do that themselves, as there are some who are structured that way, then they might be able to share some contractors with you. And then there's also I have turnkey in here, but I probably should change the term. I mean, yes, turnkey, you can look into turnkey operators that find properties, rehab them, place a tenant, and then sell it to you. That's always an option, and a pretty easy option to get into real estate investing, but there's also these all service providers, particularly in Indianapolis. I know other cities have this too, where it's not necessarily turnkey, but they're an all-in-one service. So they help you find properties. They do project management. So if it's a property that needs rehab, they will oversee the rehab of that for usually a 10% fee. So in addition to your rehab costs, so 10% of the rehab cost. Then once it's all rehab, they'll place a tenant for you, and then you can use them for property management. And a lot of them will break it out, so if you don't want to use all those services, you don't have to. But for me, my opinion on an all-in-one service provider, and with all those components I just listed, I'm not a big proponent of that, because to me, it's like putting all your eggs in one basket. And if things go south, maybe on the project management side, because that's a very up and down process, you don't want to lose that relationship because you didn't necessarily like the rehabber and who they hired, but they might have been a great realtor, or they might be a good property manager. So for me, I like to kind of try to separate all of my team members and not have them all be part of the same company. But it definitely simplifies things, and it's one contact that you have to have. And so that could be a really advantageous. But I just am not a proponent in putting all my eggs in one basket. Okay, other team members you can think of would be the inspector that goes out there. Again, actually, inspectors are very useful. I mean, in addition to letting you know what might be some problems of the property you're about to buy, but they're generally close connected with other realtors. They're close connected with property managers and maybe even contractors. So, and they're just another local team member, so they can give you some anecdotal information too about the area. Lenders, of course, are going to be a good team member. I like to, when it comes to, if you're able to get a loan, I like to work with the local credit unions in that area. So get away from the big banks, the big national banks, but find the local credit unions. And you'll hear from other people, they tend to give you better terms. And especially when you're able to grow and you need to get out of, and you're not able to get a conventional loan anymore, then, they're very good options for portfolio loans and things like that. Insurance, finding a good insurance agent or broker. I mentioned Goosehead. I recently learned about them, and they've been awesome. And they are able to offer, they have contracts, I think, with almost 20 different insurance companies, which I hadn't found a broker having that number of different policies to choose from. So But again, they can connect you with realtors. Usually your realtor will know a good insurance person, so everybody I guess the message I'm trying to say here is with each point of contact, with each team member, ask them who they like to work with. Like, what realtor do you like the best? What property manager do you like the best? What inspector do you like the best? And you'll just have a number of contacts. And yeah, it'll be a lot of work on your part to reach out to all of them, but you're bound to find one that's going to be a really solid contact for you, because it's not only how they do in their profession, but it's also the relationship, how you feel with them. Is the rapport good? That means a lot to me. So the more contacts you can get for each team member, the better. So that way you're bound to find one that's a really solid fit. And then finally, title companies. I did a comparison of all the local title companies in Indianapolis. I realized some states don't use title companies. You'll hire an attorney, but there are some fees that are variable. So, and I found one that, really focuses on investors. It's part of their name, Investor Title Services. And some title companies can pull lists for you. I haven't done that yet, but I've heard about it. And they also can help you with contracts, giving you purchase agreements, things like that. So it's worth, seeing what other services they can provide other than doing your title screening and policy. So, all right, let me see if there's another question that came up. Oh, okay. So the question is, what's my strategy on rentals? Traditional, so long-term rental, I assume, or something such as short-term Airbnb? That's funny you asked that right now, because generally my strategy has been long-term rentals, because I went in with the thought that, it's less work, less variables. However, honestly, I do think that short term might be my next direction, because I don't know if long term really is much of a difference far as the work you have to put into it compared to a short term rental. Really, what it comes down to is your team members, and the value that they bring. But short term has the potential to create more cash flow, create more profit. And so, we've had to do quite a bit of work with our long-term rentals, even being long distance and having team members in place. I'm not going to say it's been all rosy. There's still a lot of work to do. And it seems that we are working on it, on talking with our team members on a regular basis with our properties. We're up to just 5 properties right now in Indianapolis. I say just because with other investors, I know it's a small number, and then for people getting in, it's a good number. But I am probably like on a weekly average right now, talking to our team about one of the properties. And I'm just thinking, man, if we're involved this much, and that might be to our own fault because we like to be active, but I am thinking more about short-term rental, because I'm not sure if I had a good property manager in place, if it would be a whole lot more work. And the goal or the idea is you do make a little bit more cash flow with short-term rental. So yeah, it's something I'm actually thinking about myself on switching some strategies. So speaking of our properties, this was the first one we bought in Indianapolis, 311 Burke Avenue. So this one was bought 3 years ago, and I think I got it under contract. I was able to put below ask offer in, which, coming from Denver, I was like, "Are you sure?" Asking my realtor, like, that just doesn't seem right. So that's again why it's so important to build up your team, because they're local and they know what the norm is. And at that time, the norm was, yeah, you put a below offer asking. So I think they had it listed for $60,000, and we put an offer in for $55,000. and it was accepted. So it wasn't that hard. And then we went in with inspections, and we were able to get another 3,000 off. So overall, we closed at about $52,000. Oh, I'm sorry, I have my numbers off. 44,000. So we purchased it for 44,000, so even better, right? And this was going to be a burr. So we were going to buy it, rehab it, rent it out, and refinance it. So our rehab costs ended up being about 20,000. It was more than we had anticipated, about 5,000 more. So always plan for that. We had to mitigate some water in the crawl space and get all that waterproofed. So then when it was time to rent it out, we were able to rent it for $1,050, which I think is pretty darn good. It appraised for only about 75,000. And so when we refinanced it, we were able to get the loan for 56,000 because, you can only do about up to, they'll only lend up to 70 to 75%, depending, or maybe up to 80. It just all depends on your lender. And so we left in about $8,000, which, is great because, we could have left in, 64,000, but with the refinancing and doing a forced depreciation after the rehab, we were able to take out the majority of our funds, and we did have some cash on hand to be able to do the purchase and the rehab. All right. So that's my overall presentation. You're welcome to connect with me. I have a Facebook group, Long Distance Real Estate Investors. So if you just put that in Facebook, of course, you can find me on REI USA. I teach the last Tuesday of every month. And this is my other contact information, my email as well. And when I teach with REI USA, I call them market spotlights. So I highlight a different market each month, and I bring in the people who are investing along with their boots on the ground. So this last Tuesday, I had an investor who lives in California that invests in Omaha, and I had her fabulous realtor, her favorite team member, on with us. And so they tag team talking about Omaha as a great market to invest in. The investor talked about her, history there and overall experience. And then her realtor talked about more of just like different areas in Omaha, like what's happening in Omaha, and just kind of how the market layout right now. So it was really helpful. And that's what I do every month. So if there's ever a market you're interested in learning, I'm always looking for suggestions. So you're welcome to email me at jennifer@reimamas.com.
I love it. I love it. I was going to say, Jennifer, I mean, like all day I'm sitting here listening to everybody, all these teachers and all these investors, and every single person is like so different, and they all teach so differently. I just love that so much, that you can really see how everybody teaches, and and the thing is with all these, with everybody that's teaching today and everybody that you guys are going to meet tomorrow, these are not like guru teacher people. They're like real investors that get out there and just want to like share what they know. You know what I'm saying? And like a lot of them, they're not coaches. They're just like investors that want to share, so
that's what I am. I don't have a coaching program. I don't have anything to sell. Maybe one day, but I come from an education background. I used to work at a university, not as a teacher, but as a program coordinator, and I work with students. And so for me, it's enjoyable just I worked with international students. So I was teaching in my own way, about our culture. But yeah, I'm not someone that has a program. I just like to share information and share my experience. And I'm not a big time investor either. We have 5 doors right now, but hopefully that makes it a little bit more relatable to people. It makes it feel more realistic to get into. Sometimes it can get a little intimidating hearing about like, oh, I have 100 door or like 500 door.
Exactly. I completely agree. And that's why I said we have there's some that are just like you that are, have done some deals, but actually 5 is, for a lot of people, 5 is a lot of deals. You know what I'm
Yeah.
saying? When you're first starting out, you're like 5, that's a lot, you know?
Oh yeah, that's why I was like, I say just, 5, but if you're just starting out, yeah, it does sound like a lot, but it's, yeah, if you stick at it, it doesn't take too long. And we got to that many doors within one transaction almost. We had our one rental property that I showed. And then we did have a condo we had bought in Denver before I knew really any better, and we decided once we had established ourselves in Indianapolis with our first property, we decided to sell our condo in Denver. And so we did a 1031, which was probably the most stressful thing for us because we were coming from a higher valued market and investing in a lower value market. It can be done, but it's a lot of work. So, we sold our condo, I think it was like around for $180,000. And so we had to reinvest, take away commission and all that, but we had to reinvest around $160,000 in Indianapolis. And that meant buying 3 properties. And we were getting a conventional loan to do it because we weren't getting 167,000 something in cash when we sold our house, sold our condo. So we had to get conventional loans, and the nuances of conventional loans, we had to close on all 3 of them at the same time. So it's not really
That's
something I
crazy.
recommend
Did you get
to
it done?
people. What?
Did you get it done?
We got it done.
Because the 1031, you gotta be like, you have to get that done. Otherwise, you
Yeah.
have to, yeah.
Yeah. And I had a kid in all of that time frame too. So
That's crazy.
we weren't planning on it, but yeah, it was insane.
That's awesome. That's how it always is. It's always just
Yeah.
like, it's always 11th hour. Like he's like, we can get this done. And all of a sudden, like 5 things happen at the same time,
Yeah.
especially in the real estate investing world, I think.
Yeah. It was intense. If it happened today, I don't know if we could have done it considering, how crazy the market is, I don't
Yeah,
know.
especially,
But
yeah. I mean, there's some markets I mean, are you guys buying like 100,000 or less, or what is your like normal, what's your numbers? Okay. Yeah. So and that's another thing too. Is like, I mean, there's markets in Georgia, because I was looking in Valdosta, and there's houses for sale for like $20,000-$30,000. And in
yeah.
fact, David's going to talk tomorrow about finding houses that are 50 grand or less. So
Yeah.
there's totally, once you do the research, like what she's doing, I mean, there's houses out there that are perfect for rental properties. And like
Yeah.
Denver's so expensive. I like Austin, like I'm looking at Austin because we're thinking about moving to Austin. And it's like, I have a really good friend that's a realtor, and she's saying that people are going there and buying investment properties right now. And I'm like, what? Why
For
would you buy an
appreciation
investment
game only, I have to say. Like, yeah.
property?
I had
Like
my
100,000.
cousin just moved from Austin. They just sold their house. They listed it. They bought it for 480, I guess, back maybe it was like a 4,000 square foot house.
Mhm,
But
okay.
they bought it, I guess, I want to say like 8 years ago. They listed it for around 700,000, something like that. They sold it for $1 million. It's insane.
Oh my
Austin is
gosh.
insane.
I know it is.
It's like
I know.
California crazy because, well, supposedly all the Californians
They are. They're all moving to Austin right now. So we're gonna be, and actually the funniest thing is, like, it's like 250 or more in Austin right now per square foot. And to build is like $150 a square foot. I'm
yeah.
like, why would you buy a house when you could just go build one? I don't know.
Yeah. And
That's
Austin
the
and San
investor in me.
Antonio are like merging together now. So that whole I-35 corridor, it's all becoming one, like the DFW area, Dallas Fort Worth.
It's
Yeah.
like also like Denver. I mean, Denver is not a place to be investing in right now.
Not for cash flow.
No, not for cash
No,
flow.
if you want to play the appreciation gamble, you probably do okay. But I'm a more conservative player. So yeah, and I need to revise my presentation because I failed to mention wholesalers as another contact, and I'm to just kind of give an update on my personal story. I'm trying to build a lead generating website for Indianapolis. I feel like I have a good number of contacts to handle the leads when they come in. I'll take the phone calls, the online forms, and then have my contacts in Indy go and meet with them in person. when it comes to that. So nothing's generated yet. I'm just getting the website going. So stay tuned, maybe see if that's
But I think your point is that essentially you need to figure out which market to be in. And the
yes.
research and everything up to that is what you have. You can't just like randomly and just go pick a market, you know?
No, I think you should take time, put the research in and see which one fits you best in your goals. So I guess I have a question in about my minimum monthly net profit. Yeah, I probably my minimum is like $150. And that's me factoring in everything. You know, we have taxes, insurance, property management fees, vacancies, capital expenditures, maintenance, you know, so that's me trying to factor in
net
everything.
the 150.
That's what my goal is, to net 150. So it doesn't sound like a lot, but technically, you know, hopefully you get more than that each month because you're not having to pay some of these expenses every month.
Yeah. Plus your houses are appreciating, right?
They are, and we didn't plan for that, you know. But yeah, one of the Burke property I showed you at the time 3 years ago, valued at, we had an appraisal because we refinanced it, was at 75,000. Now we could sell it for over 100,000. So substantial appreciation, but that's happening everywhere, it seems. You know, so for a market that wasn't supposed to appreciate more than 1 to 2% a year, has appreciated in the double digits. So
yeah. So if you're interested in the Burr method, right, then I would highly recommend coming and hanging out with her, because she's going to have you think that way. She can teach you how to think that way. And the Burr is like, I don't even know what it is. Buy, rent, rehab, reflip, recycle.
Yeah, you got it. Buy, rehab, rent, refinance, repeat.
Resell.
Yeah. No, it's a popular, I think, especially among those who have a W-2 job and, you know, but have some money to invest, but don't have a lot. So they need to recycle those funds. I mean, that's what everyone should try to do, right? Try to reuse the same amount of funds as much as you can, you know, but yeah, it worked out, but I think it gets glorified and people are like, oh, I got even more money than I put out. Like they were able to refinance it for more than they put into it initially, you know, and I don't feel like that's the norm. I think that's, you know, like the golden egg, you know, if we can find that. But I think to be realistic, it's probably more like what happened to me. I left 8,000 in the deal, but it's much better than 64,000. So
yeah. Awesome. I love it. Well, I appreciate your time. Thank you for coming, hanging out.
Yeah, thanks for having me. Thanks for putting all this together. I mean, I'm so grateful for REI USA with all these state meetings that are coming on and just being able to attend, you know, all these virtual webinars. It's kind of repetitive right there, but anyway, but like if I had this, you know, when I first started looking in long distance markets, it certainly would have made it a lot easier. So
yeah.